What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers. I do not offer an investment trading program. Be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you open a new Webull brokerage account. Put at least 1 penny in that account. They're going to give you up to 12 free stocks for just trying out the brokerage app. There's a link down in the description box of the video. Click on that Webull link. Open up your new brokerage account today. Go get that free stock. Go get that free money. In today's video, guys, I want to share with you my 3 worst investments of 2022. But before I do that, let's talk a little bit about what happened to our economy, to our stock market, to our housing market, and to our crypto market in 2022. Inflation is what happened to all of those markets, right? Inflation went from 2%, guys, and skyrocketed up to 9% at its highest peak in 2022, which caused our economy, our stock market, our crypto market, and our housing market to all drastically drop in value. Housing market dropped in value because of what? Increase in interest rates. See, when interest rates for 30-year fixed rate mortgage loans increase sharply, it prices people out of being able to buy a new home. So the housing market suffers because of affordability. How did inflation affect the stock market? In order to fight inflation, our Federal Reserve has to increase short-term interest rates, which affect what? The ability for companies to borrow money cheaply. See, when you got fast-growing companies, like in the tech sector, a lot of these companies pay for that growth by borrowing money cheaply. But when interest rates go up and they no longer can borrow money cheaply, they can't grow. Institutional investors start pulling their money out of those companies and putting it elsewhere because those companies are not going to give them the type of return that they're looking for on that money. How did inflation affect the economy? When prices of our goods and services go too high, people can't afford to buy those goods and services, so the economy slows down. But that's where the Federal Reserve comes in and raises short-term interest rates to force inflation down. So over the last couple of months of 2022, we've seen where inflation was slowly coming down, but it was still over 7% at the close of 2022. So not even close to the 2% we need it to be at to have a healthy economy. My 3 worst investments of 2023. First one is Dogecoin. I purchased Dogecoin in probably the beginning of 2022, tail end of 2021, and it was doing fine. And then all of a sudden, we ran into all of these problems in the crypto market with crypto lenders and crypto exchanges starting to steal money from people and file for bankruptcy. And, investor confidence went down the tube. People stopped buying these cryptocurrencies and started actually selling them, which affected my Dogecoin. And that's why my Dogecoin right now is 70% lower than when I initially bought it earlier this year, late last year. Just terrible. My second worst investment is going to be Shiba Inu, another cryptocurrency. My Shiba Inu right now is about 70% down. off when I initially bought it. And again, same thing as Doge. Crypto market was affected by these crypto lenders and these crypto exchanges and all of these pump and dump scams people were doing in 2022. And it just, people lost confidence in the crypto market. And when people lose confidence, they sell their investments and they don't buy anymore. So that drives down the price. So my Doge and my Sheeb, that's where we're at with those two, 70% off of the price that I paid originally for them. Will they go back up? I don't know. I think at some point they will. Will I ever get back to even or even make a profit? Probably not. Good news for me is I don't have a lot of money invested in those two, maybe $5,000 total. So if I lose that $5,000, it'll sting a little bit, but it's not the end of the world for me. Now let's move on to my third and my worst of all three investments. And that's Tesla. Tesla, man, I'm telling you, I can just kick myself on this Tesla thing because I knew better. I tell you guys all the time, stay away from individual stocks. Stay away from trying to be the expert. Stay away from all of that stuff. Just stick with ETFs. Stick with index funds. And guess what? I went away from my own advice and I bought Tesla because I thought, wow, 3-to-1 split. It's under $300 a share. This is a bargain. What I didn't realize is when you're in a recessionary times, institutional investors who really drive the price, guys, of these stocks, institutional investors flee growth companies when we're getting ready to head into a recession. And the reason they flee growth companies is because growth companies normally do well in good times, when the economy is strong, when there's a lot of liquidity in the market and that's when growth companies do well. Growth companies like Tesla don't do well when liquidity is limited and the economy is going into a recession. They don't do well in those types of environments. And institutional investors move their money to more short-term investments that they believe will give them a rate of return until they wait out this recession and they can get back into growth stocks again. And they move their money into U.S. treasuries, or they move them into value companies that have been around forever and consistently are strong companies, and they're kind of recession-proof companies. You know, like the McDonald's Corporation or Walmart Corporation. They move their money into companies like that because those companies are pretty much recession-proof. Why? Because they're very inexpensive to obtain the product or service from those companies. You know, Walmart is one of the largest companies in the world, and it has purchasing power. So no matter what economy we're in, Walmart is going to do well because they have purchasing power. They can buy bulk and buy down prices and still make profits because they bought it so cheaply. Same with McDonald's. You know, they got a menu under $10. You can go into McDonald's and feed yourself. So that's where a lot of institutional investors go when they flee growth companies. They go to value companies and they hang there, make a little bit of money, and then they just wait out this recession. And that's what's happening with companies like Tesla. You even look at a company like Apple, who from a value standpoint, a market cap standpoint, it's the most valuable company in the world. Look at their stock price. Their stock price is right around $125 a share, guys, which is easily $75, $80 from a year ago. Tesla fundamentally is a good company. I mean, you look at the third quarter vehicle deliveries, it was around 342,000 for the third quarter. In the fourth quarter, they had 405,000. So they had an 18% growth in deliveries quarter over quarter, but yet and still, look what their stock is doing. It's down in the dumper. And my particular investment is down by 50% right now. You know, am I worried about that? Not really, because I'm long on Tesla. I do believe when the economy straightens itself out, which it will, because it always does, and then more money starts pouring back into tech companies from institutional investors, we're going to start seeing Tesla go back up in per share value. Plus, I believe Tesla will continue to deliver on what it says it can do to the market. Now, the market wasn't happy with Tesla in the fourth quarter of 2022 because it missed its deliveries based on what the market thought they should deliver. But still, 18% month over month increase in deliveries for Tesla, that's good news. I still think Tesla's going to be a $300, $400, $500 per share stock at some point in the future. But that's my bet. But right now, it's one of my worst performing investments of 2022. Drop me some comments and tell me what are your worst performing investments for 2022. And are you going to hang in there and go long on them, or are you going to cut your losses and sell them? Let me know. Curious to know what you guys are doing when it comes to your worst investments in 2022. If you want those 12 free stocks from Webull, click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing, share the video, smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.